Welcome everyone to another episode of Market Commentary, where we talk about what's going on in the crypto and the stock market. Today, I'm joined with my colleague Jonas and myself, Umoren, your trusted money coach, and we're going to be delving into some materials today about what went on in the market just this week. And just to go over what we're going to be talking about, and just to go over what we're going to be talking about today, number one, we're going to talk about the Fed monetary decision that happened this week. We're also going to talk about the market sell-off. Then we're going to dive into what happened in the crypto this week. Then we're going to talk about the economic indicators before we then go into the Q&A for this week. So welcome aboard, everyone. And before we dive into today's discussion, it's important to know that this is just a conversation between two friends. We're just talking about what happened in the market. Nothing in this video should be taken as investment or financial advice. And if you have any question that you want us to discuss peradventure in subsequent episode, just leave them in the comment area below. And if you haven't subscribed yet, what are you waiting for? Hit the like and the subscribe button, and don't forget to share this with your friends. So welcome on board, and welcome to my friend too, Isaac Jonas.
Thank you so much, my friend. Today, just because we have this promise to always deliver to our audience, even though I'm kind of like under the weather, I have a terrible flu, I have had to just, man up and try to just, show up my face so that we can just deliver something. So I'm excited. Thank you so much again. So we have the overview of what we are going to
Yes.
talk about.
So yeah.
And
Mhm. So first off, usually we just start with some of the chart that talks about what has been going on in the Dow, the S&P, and the NASDAQ. And we see, we saw earlier this week that the indices, the major indices, the Dow, S&P, and the NASDAQ, some of them reached very high levels this week. But we also saw an interesting thing that happened when um, the Fed Chair Jerome Powell spoke earlier this Wednesday. And before we even delve into specific stocks that we want to cover today, Isaac, is there anything you want to talk about in terms of the stock market, especially how the major indices reacted to the decision of the Fed this week?
Yeah, I think it's important to recall that last week we indicated that one other thing that was potentially going to cause volatility, right? If you watch the last episode, we said the Fed meeting.
Yes.
Usually this is FOMC meeting, like Federal Open Market Committee, which is a group of federal governors across the United States who then meet and decide on the monetary policy that is basically to increase or reduce money demand supply, and also use other instruments like just to mop up the excess liquidity or whichever situation may be, depending on the data. So it happened as we, I would say, anticipated, because it's very hard to predict how people will do. I have someone, I was talking to him, and I remember you called me when the market was dropping. He just entered into a position, and then he forgot that Chair Jerome Powell was going to be talking. And oh boy, within a few seconds, that position was really down. So that's another key thing. Whenever Jerome Powell, or when I look at the economic data, when there are three stars, right, that indicate the potential volatility, I don't like to be trading, or if I want to open a position, it's one of a potential catalyst like what happened, because you saw what happened. The S&P 500 dropped by almost 3%, the NASDAQ almost 3.6%, which is a huge drop. I think the first in a single day since the
Yes.
COVID epidemic. So what that meant is, why did it drop? Do you want to chime in on that?
So I think one of the major things that also made the market to practically just sell off was just, again, I think the market was expecting that in 2025 we're gonna get about four
Yeah.
interest rate cuts. That was what the market was expecting. But when Jerome Powell spoke on Wednesday and said, hey, the US economy is pretty strong, and most likely we're only going to be getting just two rate cuts. Again, it's just because investors or the market has been expecting that, hey, we might keep getting Santa rally.
Yes.
But just to be realistic, the US economy has been very strong. If we look at how the market has even recovered just this 2024,
Yes,
2024 has
solid.
been an amazing year. And if we keep cutting interest rate, there's always the likelihood that we might run into even higher inflation next year. So
Yes,
again, just part of the dual mandate for the Fed is okay, we want stable prices and also unemployment should not be skyrocketing, right? They want
yes,
stable rates too. So it's a delicate balance to really
yes.
see, okay, should we be cutting interest rate and let the stock market and the crypto market keep going up, or do we want to run the risk of even having higher inflation? So again, it's a very delicate balance to just know. But I also wanted to hear your take on this for
Mhm.
people that, for example, they've seen that they've not been maybe participating in the market,
Yes.
and now that we're going to be ending 2024, the
Mhm.
market has been rallying all of a
Yeah.
sudden they came into the market. What's your thought on that, especially as we experience this volatility in this
Yes.
past few days?
That's a good question, Coach. I usually try not to predict the market, but here is my approach to this situation. For me, when I look at the equities market right now, recently they
Mhm.
were hitting all-time high. So for me, like I have said before, usually the market doesn't go up in a straight line. It
Yes.
sometimes pulls back because there won't be a supply curve. It goes back to the demand curve because what happens is that sometimes people want to take profits, and I'm talking about real big institutions that can really move the market, right?
Yes.
Now, in that regard, there are some still undervalued companies, that may be in
Mhm.
different sectors because money has been mostly, the mag 10, if you look at the top companies like
Right.
Tesla,
Mhm.
um, Amazon, these are the companies that have been really propelling the US public market, especially the S&P 500. Even if
Yep.
you look at the NASDAQ, yeah, NVIDIA, right?
Mhm.
But in Palantir as well. But the thing
Mhm.
is, stocks don't always go up all the time. And I keep on saying that. So for me, I like to have a hedged portfolio. Right now, we cashed out on the VIX ETF, which
Yes.
was really an unexpected Christmas gift. So I like to approach the market with humility to say,
Mhm.
for my long-term positions, core position, I want to be averaging down what we call dollar cost averaging on the core position on the ETFs that track the S&P 500, only those
Mhm.
ones. In terms of specific individual companies, now I have to do a deep dive, deep analysis, and try to
Mhm.
understand valuation. And I want to get in when there's a huge margin of safety. That means
Right.
it has to drop significantly, 40, 50%, whether they miss
Mhm.
their earnings without the fundamental or structural change of that business change. So that
Right.
means you need a skill to understand that. You need to understand that, like the way that you understand Tesla, Palantir,
Mhm.
and NVIDIA are blooming.
Mhm.
So that's my approach. My approach is segmented for the core position on the ETF, which now largely is my bigger position, right? I
Right.
averaged it
Right.
down when it dropped, right? Now it's
Mhm.
already up. So that was a good position. But for individual companies, I didn't add, but I'm
Mhm.
constantly researching individual companies in different sectors, which if I see opportunities, I can then buy. But I'm a
Yeah.
bit leveraged. I'm a bit, more on the
Uh,
side of like having a bit of cash.
yeah.
And when the VIX ETFs pull back below a certain level, right? Because
Mhm.
usually the VIX index, it's supposed to be around 20, 30. That's kind of like the normal range, right? So once it retraces back, I like to kind of have a small portion, whether
Yes.
5,
Yeah.
10%, in addition to the cash that I have in that portfolio. Yeah.
Right. So just before we wrap up this particular segment, I also wanted to just point out that, yeah, on Wednesday we saw that the market sold off, then even
Mm.
yesterday, Thursday, then today, Friday, when we're just doing this recording. But we're saying that the Dow, the S&P 500, and the NASDAQ, it's in the green today. So can we say that investors didn't really digest what Jay Powell said and just panicked and just
Mhm.
literally exited some of their positions? Or what would you say is
Yeah.
just happening in the market today? Because we're seeing a very
Yeah.
strong recovery.
Yeah.
just going up from the sell-off from 2 days ago.
Again, that's why for me, I think it's easy to make money in the market if you can control your emotions and understand what you are doing. I think for me, it's classic human behavior, right?
Right,
That they just generally, my observation has been that it's kind of like a head behavior, like, oh, the market is dropping, right? It means there are people who are selling off, they are panicking. So I've learned to train my mind to behave and to think like big institutions, right?
right.
I have seen that usually there's a sell-off, right? Which is usually typically, I would say, the contractionary phase to say, you
Mhm.
see, like companies, people are selling off, and those retailers and people who or institutions who would be selling, provide entry liquidity for the big institutions, right?
Yeah.
And once they see that the trend has reversed, like now, you see now it's in the green, people have a tendency to say, hey, we are missing out. We are missing out. Let's get back, right?
Right,
But by that time, they enter, they end up, like you said, that time providing exit liquidity for those people who are
right,
smart. So that's the
right,
cycle. So if I'm able to regulate that emotional roller coaster situation, like to say, okay,
right.
why am I investing? Why am I entering in this position? Is it a long-term position? Yes. So
Hmm.
the market does not always go up in a straight line. So if it's a
Right,
fluctuation, a sell-off in the S&P 500, if the fundamentals are still strong, that's a healthy thing for me. So
right,
I'm excited for those pullbacks because then I get to add on. So it's classic human behavior, but I also
right,
think at the end of the day, as an investor or a trader, you really need to understand, you know, the macroeconomics, what's really going on, but
hmm,
also kind of like have a bigger picture to say, look, are the fundamentals strong? Are there some risks? You know, which in some
right,
cases it can be extremely difficult to
right.
predict, but experience
Yeah,
can be the best teacher.
I think that's absolutely true. Like just seeing how the market has already started to recover today. Again, I think is one of the testament to what we've always been saying that timing the market beats timing the market because no one can truly
Yes,
predict the direction of the market in the short term. But over a long period of time, if we stay invested in quality
yes,
stocks, then we will be good. So yeah, I think Mr. Market just has a way of teaching us
yeah.
one or two lessons, so which is really amazing. So we're going to jump into the next session, which is going to be crypto. Except if you have anything to add before we go into crypto, coach.
I think we can proceed on the next item, but thank you for asking, Coach.
Right. So, one of the other things that we want to talk about. So, one of the other things that we want to talk about this week is what happened in crypto. As exciting as this week has been and even very volatile, one of the things that happened in crypto this week was that Bitcoin hit another all-time high of $108,000.
Wow.
Again, when this happened, just few days later, crashed to almost $92,000. But again, the market has started to recover.
Wow.
And what we always like to say is that Bitcoin or cryptocurrency in general can be very, very
It's
volatile,
not for the
meaning
faint-hearted.
that if you don't have the emotional strength to weather this volatility, please don't get involved in crypto. But again, I also like to put out the caution that a lot of people judge Bitcoin by the volatility or just by the price, but I like to separate that because if I look at it over a longer period of time, Bitcoin has been one of the best performing asset over the past 10 years. The other thing that also happened this week, we saw the possibility of a US Bitcoin reserve, and this is going to be coming under the new administration. We don't know if this is going to happen, and one of the key things for this is for a way for the US to be able to pay off its national debt at some point and also to really cement US position in the market in the sense that you know that the US currency is the major world reserve currency and over time majority of the currencies they lose their value and a way for the US to still maintain the stronghold is to at least have a Bitcoin reserve because if we look at just Bitcoin, the quantity is already fixed, and more people are coming into Bitcoin, into crypto in general. just basic economics, we expect that the price of Bitcoin or crypto in general is still going to go up. Again, nothing in this conversation is financial or investment advice. It's just an observation that Bitcoin is becoming um is becoming something that is just acceptable, not just in the US and Canada, but literally globally. And again, I always like to say that Bitcoin or crypto in general is a global language, meaning that this is something that wherever you are, whatever the nation that you are, we understand what Bitcoin just means. If you say, okay, I have one Bitcoin, I have zero point 0.5 Bitcoin, or I'm going to sell this product to you, this at this quantity of Bitcoin, it's something that anybody can still participate in. And because one of the other things that we tend to see is that a lot of people focus on just the Bitcoin alone, but there are other ones. We have Ethereum. Just this week, we saw that Ethereum reached the 4,000 mark. I mean, that's not the all-time high, but it's getting much closer to the all-time high. And that's only because there's been more inflows into the Ethereum ETF. Again, this is a very, very bullish sign for the crypto market. We also saw stablecoin. What are stablecoin? These are just cryptocurrencies that are pegged to the US dollar, meaning that one stablecoin, maybe for example USDT, which is Tether, or USDC, which is the one for SECO. These are just stablecoins that are just pegged to the US dollars. And this week we saw that we got another approval for Ripple, and we have the RLUSD. Another thing is that, again, we saw that Coinbase, the listed USDT, here in Canada, we don't have USDT anymore. I mean, they don't allow us to use the USDT, but we still have USDC. Again, these are just some of the developments. These are just some of the developments in crypto. The other thing that we also saw this week was that crypto, the total market cap for crypto reached another all-time high of $3.7 trillion. This again, I don't know where it's going to be in 2025, but I want to assume that it's going to be definitely much higher than 3.7 trillion. We also saw that Tether, which is a stable coin, minted about 1 billion USDT. Why is this happening? This, I honestly feel like it's a bullish sign, which I'm going to cover in the next slide. The reason being that we're expecting more transactions to happen in crypto over the next few months. And one of the things that we also saw is that Binance, the user deposit has gone up just this year to 21 billion, over 21 billion. Again, this is just saying that more people are coming into crypto and they are going to participate in the crypto space even in 2025. Tether meaning about 1 billion USDT. It just means that there's going to be more liquidity in the market for people that want to trade in and out of crypto, or if they just want to buy USDT and then use it to buy any other currency. I mean, any other cryptocurrency. Then again, it just signals some confidence in the market that, hey, we're expecting more demand. And if we're going to be expecting more demand, USDT or stable coins is just one of the easiest ways that people get into crypto to be able to trade in and out of other cryptocurrency. So that's just one of the major things that happened in crypto this week. And for me personally, I always want to say that it's just important to at least have some allocation into
Yeah.
crypto. That's just my own personal strategy. And again, this might not work for everybody, but I like to study what's going on. And I'm saying that 2025 is going to be a very bullish year. It doesn't mean that we won't have corrections or some dips. Yes,
Mhm.
we're going to. And I
Yeah.
expect that we're going to have the parabolic moment for 2025. Parabolic meaning that crypto can just start skyrocketing. The
Mhm.
prices will get to unrealistic levels, and it just means that a lot of people might make life-changing wealth next year. But even in the midst of this, it also means that a lot of people are going to lose money because
Mhm.
some people are just coming into crypto now and they don't know the nuances, right? Some of the
Yeah.
times that, oh, should I get into this or not? Again, I just expect that 2025 we're going to experience some parabolic moment, but expect a lot of volatilities too, because again, we don't know what's going to happen in the market. So, Coach, do you have anything to say regarding crypto in general, or just your perspective, or if you want to add anything to the
Thank
crypto
you, Coach.
market?
For me, my perspective is that I'm big on equities, but I have a
Mm,
very, very small allocation of, like crypto. But the thing is, I
mm,
like to learn what's really
right.
going on. but I'm not yet comfortable to kind of like increase my allocation maybe to 5-10% of the like our family portfolio. But I like to learn, like I said, and I'm
Right.
observing what's going on, and it's very interesting.
Right. Okay, that's totally fine. And yeah, we're gonna move on into the next session where we're gonna be talking about the economic indicators. And Isaac, I know this is your own
Yeah,
area of specialization where
yeah,
we go over what's going on
yeah.
in the market next week.
Yes. So basically, I'm not going to show a chart because next week there's gonna be Christmas holiday, so the market will be
Yes.
closed. I think on Wednesday and Thursday, right? So
Hmm.
we have Monday and Tuesday, right? That's gonna be
Yes.
like trading days. But what I've seen is that generally, judging by what happened in the in this week, the US economy is strong. And what
Yes.
that means is that potentially the economy might continue to go up. That doesn't mean that there may not be other risks. For
Mhm.
me, the risks that I see potential, I send out my newsletter. You may have received this coach
Yes.
today, is if the US, there's a government shutdown, but statistically, it has been shown that usually sometimes it affects the market in the US, but sometimes it doesn't. Anyway, mostly people will be kind of like shutting down in on Christmas mood. But I think the interesting thing is has been some comments from the incoming Trump administration, right? With what's going on with the potential tariffs and
Mhm.
maybe the potential to have like the Doge, the Department of Government Economic Efficiency, and also
Mhm.
for me, I think from what the Fed said last week, the risks and opportunities are in balance. So when things are like that for me, I think there are kind of like more risks. And I also believe that the market had really rallied too much to price potential deregulation for the
Mhm.
incoming administration. But now, if when Trump comes into the presidency, if they don't deliver, for example, if inflation starts to potentially go up, if
Mhm.
job numbers and all these other economic indicators start to maybe go in a manner that the Fed might be forced to start increasing interest rates. What I see potentially, and again, this is depending on multiple factors, and I'm not saying this is a prediction, but these are the potential risks. So
Mhm.
in terms of how I balance my portfolio is like I always say, I like to have a hedged portfolio, having a bit
Right.
of cash, have a long-term perspective, and only invest in things that I understand. I like equities, right? Some people like a bit of bonds and
Mhm.
also quality, high quality companies in terms of their financials, the management. We have explained
Earlier.
at the beginning. Yes.
Yeah, yes. Yeah, I think that's a very interesting perspective. And yeah, 2025, again, we can't tell. We don't know what's going to happen,
Mhm.
right? We're going to be getting a new administration. We don't know the type of policies that are going to be in place. But overall, I always just maintain the stance that it's just
Mhm.
important to just keep dollar cost average into strong positions. That's just it. I mean, the moment that you just know that, okay, I'm going to take away my
Yeah.
emotions, I'm not smarter than Mr. Market. I will just DCA over time and let the market do its thing, provided you're a long-term investor. Again, that's my own personal strategy that I just keep dollar cost averaging into strong positions and I just let the market do its thing. Because sometimes one of the things that I've learned over time is
Yeah.
that when I wait, saying that, oh, I'm
Yeah.
waiting for the perfect time, I
Yeah.
tend to miss out on quality position or quality entry points. So
Mhm.
again, I just tell myself that, hey, my brain is not big enough to start saying that I should get into the market, this or that. It doesn't mean that I don't edge my portfolio to know that, okay, we might have some volatility. But on average, if you're just a beginner investor, just dollar cost average over time and have a long-term perspective, and you'll be fine.
I have a
So
question for you, coach.
yes.
So, I think you and I have had this conversation, but I think when you dollar cost average, I think it will be after you have done thorough research on those
Yes,
individual companies, right?
yes,
And then you
yes.
believe like, okay, you understand the valuation, you understand the service or the, so it's not just taking in random stock and starting to dollar cost average, right? I just wanted to make
Ye-
sure I'm
I think,
clear on that.
yes. I think for most people that are just starting out, one of the things that we always emphasize is the need to educate yourself.
Yeah.
That because just spending time to know the type of investor that you are, it will really, really just help you in your decision-making process. For example, Isaac and I, we have different investment style, but we share core principles in terms
Mhm.
of, hey, these are the type of stocks that I invest in. Oh
Mhm.
no, this is not a great company. We
Mhm.
share the same fundamental principles in terms of investing,
I'm big
but
on ETFs.
yeah, so in terms of our style, it might be different, meaning that, oh, I'm going to invest in ETFs, and Blooming is a crazy one saying, no, I'm going to go all in into Tesla. Again, it's just different investment
Yeah.
styles, but we're comfortable, meaning that when we go to bed, I can sleep peacefully. And that's one of the game changes that the only reason why we can say that confidently is number one, we've spent time educating ourselves about the market. And number two, we know the type of investor that we are, meaning
Mhm.
that I feel more comfortable playing in this space. But it also means that we've spent a lot of time just learning. For people that doesn't want to dedicate the time to learning, maybe just simply ETFs. I mean, you don't have to just ETFs, but even with that, you still need to know the type of ETFs that you want to get into,
There's
right?
some
Not
research.
just just you need to do the research. And this is where mentorship comes in. If you're not sure on how to go about this, reach out to Isaac, reach out to me. This is what we talk about. Because why? The role of a mentor, like it just takes away a lot of mistakes that you would have made in the market. And I always say that a lot of people, when you don't pay for knowledge, you pay more with ignorance. It's
Yeah.
just a given. Because
Yeah.
again, we spend time just understanding the market and deploying capital. When we look at our portfolio, we're just smiling and we're like, we wish we have started this 10 years ago or 20
Yeah,
years
we were
ago,
laughing
right?
about this
Right.
yesterday, kind of
Well,
like just
but
having this
yeah.
conversation to say, look,
Yep.
if I had put this money in like GIC, for example, not
Yes.
that GICs are bad, the portfolio is but now the thing is like you really have to have a skill. I was having a conversation with my cousin, lucky if you're listening to me, watching this, and he said, I said, like, why is it that people don't want to just start investing or even learning, pay to learn? And he was like, you know what, Ango, the thing is like you have the education, you need the
Yes.
education to understand. So for you, it might be easy in the sense that you understand stocks, you understand bonds, you understand this.
The
So,
market.
like you
Yeah.
said, I think in that case, that's where you should take control of your financial situation by either walking to a bank, their financial advisors, or coming to Blooming or myself to then say, hey, I want to invest. I have this capital. This is, and for sure, even what I do with my clients, I'm sure you do that, coach, is you understand the risk tolerance. Do you have an
Yeah.
emergency fund? Do you have some debt? What are your
Yes.
goals, right?
Hmm.
Because at the end of the day, like you rightly said, coach, my approach is that I trade a bit of the money that I have in cash, occasionally swing trading, right?
Hmm.
But at the end of the day, I sleep peacefully, right? I sleep
Right.
peacefully. And if I look at the return, for the most part, I'm kind of like doing really, really well. But
Yes.
nothing is guaranteed in the market. And I keep on telling people because someone reached out to me yesterday saying, look, is this real? There was a photo of someone with another notable person and meeting another notable president in Southern Africa. And then they were saying, we'll be guaranteed to make this money. Once you see someone who says,
What?
oh, you are guaranteed of this money, this return, unless maybe it's a fixed income instrument, right? Like
Hmm.
GIC that says you'll be guaranteed of your principal plus,
Hmm.
interest. But other than that, other, you know, equities or other securities, there's always a risk each time that people think of the profit. So I'm big on trying to manage the downside, and I believe the upside will take care of itself. That's why I'm kind of like conservative. If I can get 20% compounded every year, I'm happy with that. If
Right.
I can beat the S&P 500, I'm happy with that. But the thing is, like, I want to do that consistently, right?
Yeah.
With minimum risk.
I mean, you really put it bluntly, like, yeah, you just want to make sure that you're the type of investor that you are,
Yeah.
and you just know that if somebody is guaranteeing you, or for example, somebody say, okay, if you invest $10,000, you're
Yeah.
guaranteed of your principal, but your return in the next 2 months is $40,000. That is
How do
not
you know?
realistic. Like,
How do you
how
know? There are a lot
how
of
is this
unknowns, right?
exactly? So that's not possible. Like, you're putting in 10,000 and within the next 2 months you're gonna get 40 grand. Again, that is just a big red flag. And it's just important to just know that. Yeah, anytime you get conversations like that, it's
Yes.
just a major, major red flag. Like, don't
And
even
coach, I wanted
yes,
to add something. I think maybe at some point we should have a conversation about scams because I
yes.
think I have had clients who some people do like some people they sell houses after being convinced to say you'll be guaranteed this return. So I put it to you that on average, look at the data. The S&P 500, I've said this before, it usually returns about 10%, 12% if includes dividends, historically, and that does not guarantee the future
Right.
returns. But the thing is, right, people who are exceptional, of course, Blooming, who has been bringing crazy returns and stuff like that, you really have to understand to take time, right?
Mm-hmm.
And you have the skill. But regardless of that, there are also some moments, even you mentioned the other time, coach, that when Tesla, for example, dropped it to 145, you were kind of like saying, did I make the right decision? And that's why a lot of people then end up losing money because they then sell at the bottom. I want to give you an example. We got in the VIX, right? ETF, I was kind of like, okay, there might be another event and stuff, but because it was a smaller position, guess what happened this week?
Okay.
It
It
was
is
just one day, but if you look at the portfolio at that time, it's like, oh, it's down maybe 10, 15% in that one position. But then
mm,
the mind psychologically, it will be like, so you have lost the money. You won't lose money unless
until you
it
sell.
becomes real, you sell,
Yeah.
right? But
Yes.
the core point is, I say you really have to understand why you are getting into a position, educate yourself. So I think it's very
Yeah.
important to be careful of scams out there. I'm passionate about it because a lot of people come to me with this
Yeah.
preconceived notion that it's very easy to make money. I don't know whoever tells people that it's very easy. If it was that easy, then everyone would be a
Everyone
billionaire or a
would
trillionaire, right?
exactly.
Yeah. So there are
Yeah.
nuances, there are risks, a
Right.
lot of risk, right? So be careful.
Yeah, I think just to wrap this session up, I always like to say that nobody is going to care for your money like you're going to. If you, the moment you find somebody coming to you that give me your money, let me invest for you, and I'm going to help you double and triple and quadruple, without understanding what the person is putting your
How?
money into, like,
Yeah.
you're gonna be scammed. It's just a no-brainer. Why would the person come to you and say, "Give me your money, and the next few days, in the next few months, next year, I will give you back this," and the person disappears, and now you're like, "Oh, I've been scammed." I'm like, you didn't do your due diligence. Know that nobody's gonna care for your money like you're going to do. Just take the time to understand, so that even when somebody comes to you and say, "Oh, put your money in GIC," you're like, what?
That's sense.
GIC. And lock it in for the next 5 years. And how much are you going to be getting? You're going to be getting 2%, 3%, 4%. When historically the S&P 500 is returning 10% or even 12% annually. So you just know that that's not a place to put your money if you're trying to build wealth long
Yeah.
term. I won't personally put it into GIC. That's just my own take. But a lot of people would just say, oh, this person at the uh, institution or the bank told me to do this. I always like to question and challenge things that the fact that somebody is sitting in an office and is wearing a three-piece suit or is just in this glass house
Yeah.
or in this glass office doesn't mean that this person knows everything. That's
Yeah.
my own personal take because I've had personal experiences going to the bank, and the type of advice that they give is the one that will benefit the financial institution.
Yeah,
They will
well,
tell you that,
that's
oh, yes. So I'm just saying, question things, just believe everything hook, line, and sinker,
ask the
even if the
questions.
person is in a financial institution or in the bank. Again, just question things
Or
and make
even
sure that
ask questions.
yes, question.
But
Don't always believe everything we're
yeah,
saying too.
yeah.
Don't just say,
But
"Oh, Blooming said this" or
yeah,
"Isaac said this." No, question like,
yeah,
"Oh, is this true? Is this what
yeah.
I want to do personally?" I
And
mean, yeah.
yeah, and I wanted to add that though, sometimes there are some situations where GICs can make sense to put your money. Let's say you want to buy a house in a year
Mm-hmm.
or in 6 months, right? At least,
Yeah.
so short term or something. So the point is, that's why it's very, very important to ask questions and to have a perspective where you then get to do things that you're comfortable about. I remember, Coach, you said there were some questions that you got
Yes.
from
Yeah.
audience. If
So
we can maybe just quickly
I'm just gonna quickly
address
jump into
this.
that so
Yeah.
that I know that we can go into this conversation of the market.
I think I would say from my observation and talking to clients, I think it's mostly behavioral aspect to say sometimes people tend to panic and sell. They just buy, like you said the other time, you really have to understand why you are buying and when you are buying, right?
Mm-hmm.
But the other thing is sometimes people may not have emergency fund. So let's say if someone loses their job, they have a mortgage and the market drops. Oh boy, what that means is they would be forced in that case. So it's very important to have a bigger picture. When you want to really invest, like we always say, educate yourself, understand your risk tolerance, and then
Mm-hmm.
build an emergency fund, and then always have a balance in terms of like kind of like seeking expertise or educating yourself. If you are going to be invested in equities,
Mm-hmm.
diversify, but not over diversify, don't over trade. So there are a lot of nuances, but I think the big part is fear of missing out, just following the head, like what happened last time. You know what happened? The market is
Right.
now going back up, but we added our position because for me, I believed that the market was going to rebound. It doesn't mean that I'm always right. It
Yeah.
might as well close the day
Fall
down.
apart again.
Or
Yeah.
even next year, it might start the year by 20,
Red.
10%. But am
Yeah.
I going to panic? No, because I want to have an emergency fund first. I understand that historically, if I look at the economic data, usually businesses tend to grow and go back, to those levels where they can generate more wealth. So it's a long-term gap for me.
Right.
Yeah.
I, I think that's very important in the sense that a lot of people, when they come into the market, they just want to make fast money,
Quick, get rich
but
quick.
they just want to make quick money. I just want to quickly buy this, then next week I'm a
Yola.
millionaire. And I'm like, no, it doesn't work like that. You have to stay long term. That's the way you make money, not over the short time. But again, it's just some of those nuances that a lot of people might not understand, which is it just takes some learning. So the question for this week for crypto is, what are the real world uses for cryptocurrencies? Okay, so one of the first things that I like to say about the use cases for crypto is number one, I like to see cryptocurrency in general, or let me say Bitcoin, first as a store of value, meaning one of the ways that I can just pack and build wealth over time. That's just my own take, especially for Bitcoin. Not all cryptocurrencies are a store of value, no, but Bitcoin is a store of value, meaning that I can buy today and I know that if I keep it long enough, maybe over the next 15, 20 years, the price that I bought it for today is going to be much lower compared to what it's going to be in the next decade or so. That's one
Much
of the
higher,
first,
I guess,
yeah, it's going to be much higher than what I paid for today.
and hopefully above inflation levels.
I think if we look at historically, Bitcoin for the past 10 years has literally been the best performing asset.
That's
But
true.
that's only because it was starting from a very low base, right? But
Yeah.
again, we're getting more adoption, and maybe we might not get all those asymmetric returns again. But again, it's just a good way to just pack money long time. And this is just my own personal opinion. One of
And
the other
coach,
use,
I wanted
yes,
to ask, but again,
yes.
why do people keep on losing money in cryptocurrencies apart from maybe scams? Again,
Okay, so when it comes to crypto, there are a lot of nuances. Nuances in the sense that when you come into crypto, you're literally your own bank, meaning there is no protection, no customer service that you can call
yeah,
if you lose your investment. There's no protection from the government. Like when we invest in stocks, we have the insurance, or when we put our money in the bank, we know that our deposit is safe, so to say. But just saying is that when people come into crypto, there are a lot of mistakes that you can make. For example, if I send my Bitcoin to a wrong address, I cannot recover the Bitcoin. It's gone forever. It's gone. But for example, if somebody mistakenly used my credit card or an unauthorized transaction happened on my credit card, I can call my bank and say, hey, I did not authorize that. But for crypto, there is nothing like that. We saw a similar example that happened with this girl, Ellie Welsh,
yeah.
Twak, or whatever she calls her name. And we saw that a lot of people just believed her blindly. They were coming into crypto with the expectation that, hey, I'm going to make quick money. Yes, you can make quick money in crypto, but you can lose tons and tons of money. You can literally lose your life savings. And I always say that never invest more than you can afford to lose. A lot of people, when they come into crypto, they just put in literally their life savings, but they don't have the stamina, the emotional capacity to withstand the pressure. So I'm like, why would you invest your life saving into something that you have not researched? So again, people lose money for sometimes silly mistakes. Not sometimes they've not done their research. Sometimes they're just gullible, meaning that just trusting somebody blindly on the internet.
Yeah,
Tell people, don't even trust me. No, question things because why? What if I'm wrong?
yeah,
So again, it's possible to lose money in crypto, but it's also possible to make life-changing wealth.
yeah,
And if I also go back to the use cases of crypto, one of the other use cases is remittances. A lot of people, a lot of institutions, a lot of companies, they serve as a middleman when we, for example, we want to send money from Canada to Nigeria or to Ghana. Those middlemen, they collect a lot of fees. Number one,
yeah,
fees for even sending money, then fees for the exchange rate. But when you come into crypto, it's easier. You can even transfer $1 million, $10 million, any amount you want globally within minutes for a fraction of the cost, and it's almost literally instantaneous. So again, that's one of some of the use cases. Again, some of the other things that I look at is smart contract. What a smart contract? That's where we talk about Ethereum. It just simply means that two parties, it might be two or more parties, but just for simplicity, two parties have an agreement that, hey, for example, I want to buy a house from Isaac, and Isaac is a seller, and I am the buyer. And Isaac says, I'm going to sell this house for $1 million. Blooming, okay, this contract is going to execute provided I can see that you have the $1 million to pay for the house. And number two, for me personally, I can verify that you own this house. And this is embedded in a code on a smart contract that is on the blockchain. So it's once we fulfill those criteria, those preset conditions, the contract automatically just executes. Those are some of the applications of cryptocurrency. So again, some of these things, it might sound complicated, but that is the world we're going into. Many of us, I don't think any of us imagined that we'll be shopping online 20 years ago on Amazon. But now it's just a normal thing, or shopping on TikTok or shopping on Instagram. But 20 years ago, I don't think that was a possibility. But in the world that we're going into, I'm telling you that a lot of things that we cannot even imagine now are going to become applications or use cases of cryptocurrency. And these are some of the things that we're just looking at now. We can even talk about DeFi, that's decentralized finance, whereby all those services that the traditional banks offer now, we can just do that on cryptocurrency. meaning that, hey, I can just lend, I can borrow, I can earn interest on my cryptocurrency. For example, there was a situation that happened to somebody that this person moved some money from a crypto exchange to their traditional bank, and all of a sudden, their bank called, hey, we're closing all of your account. Literally debanking the customer because why? You're participating in crypto. Again, when
Mm.
we have situations like that, meaning that a centralized body can just determine what is going to happen, that is why we need crypto, meaning that nobody should be able to control your financial future. Again, this might sound very complicated, but this is the world that we're going into. It's very optimistic. It's looking promising, in my own opinion. But despite the fact that it's very promising, a lot of people are going to make mistakes over time. And I truly just say that for us to avoid those mistakes or to reduce the possibility of those mistakes, just educate yourself. And to me, those are just some of the use cases of cryptocurrency. But again, if you have any question that you're like, oh, I want
Yeah.
Isaac or Blooming to cover this, always let us know in the comment area below. We love to talk about what's going on in the market and also some of the use cases. And Coach Isaac, I don't know if you have anything to chip in on what we just talked about.
I'd just like to, wish our viewers a very wonderful Christmas
Yes,
holiday, and hopefully we have time to reflect and,
yeah.
family time for us. I think it's been a very incredible year, and I appreciate all the support that you guys have given us and continue to give us. So, but always trade and invest wisely, and may the markets be with you, Coach.
Yes. Merry Christmas, everyone, and we will see you next week. And we will see you next week. Okay. So may the
Yes.
market be in our favor. Until then, don't forget to subscribe and like and also share with your friend. We'll see you next week.
Absolutely. And also subscribe to my newsletter at www.streetwiseeconomics.com for exclusive financial insights. Thank you so much again, and bye bye for now.